How the 2024 election could affect stocks. A likely Biden-Trump rematch is top of mind for investors as former President Donald Trump moves closer to clinching the GOP nomination. For investors, history suggests a strong pre-election year will carry over into the following year. Analysis from Carson Group's Ryan Detrick found the S&P 500 has recorded gains every election year after 20% plus gain in the pre-election year. And while history shows stocks usually go up regardless of which party is in the White House, analysis from Goldman Sachs found that tech is usually the worst performing sector in the year leading up to the general election, while utilities and consumer staples tend to outperform. In the near term, President Biden's green energy push, crackdown on fossil fuels, and escalating tech war with China are among top issues for investors. For Trump, the former president's trade agenda, along with his pledge to, quote, drill baby drill, have different implications for both for stock portfolios. Record profits for big oil. Energy policy will likely be a priority for both sides of the aisle in November. Though critics of Biden's renewable energy push argues he's waged a war on fossil fuels, this sector has performed quite well under the current administration. ExxonMobil and Chevron have reported record profit, and the U.S. oil production has hit record levels. But Trump's campaign promise to deregulate energy production and abolish current renewable energy subsidies will be another boon to the oil industry, according to Kate Blease, global head of market and strategy for Blocks Cross. Big oil will be able to export as much as possible to new market, Blease told Yahoo Finance. When you sum up the reduction in cost, the access to new markets, and the reduction in regulation costs, the ability to produce additional products will increase feedstock, then big oil will make even more money. On the other hand, though, Blease warns oil giants will struggle if President Biden is re-elected, arguing the administration will likely become more aggressive. Crackdown on China. Now, no matter who wins, some industry will be facing an uphill battle. Both Trump and Biden's aggressive stance toward China have the potential to rattle investors and corporate decision makers, warned China-based books Shazad Kazi. I think we're going to see a lot of aggressive maneuvers on the China front, Kazi told Yahoo Finance. Trump's decision to target China with tariffs as high as 25% during his first term put investors on edge, while Biden's initiative to crack down on China's technological advancements placed chip giants in the crosshairs. Portfolio Wealth advisor President Lee Monson warns that while neither candidate is good news for chip makers like NVIDIA, Trump could pose a bigger risk. Biden has not been friendly to China, but Trump's going to be even worse, Monson told Yahoo Finance Live. When you look at Trump, he's mercurial and could just cut off the tap and tell NVIDIA they cannot sell anything. A total ban could be a massive hit to American chip giants. China accounted for about 1/3 of the sector's global sales in 2023, with AI leaders like NVIDIA and AMD generating at least 20% of their revenue from the country. Companies that rely on China for sales or for supply chains are going to have to adapt, Monson added. Automakers struggle with EV costs. Now, since Biden took office, electric vehicle sales have more than quadrupled as automakers jump on board with the administration's ambitious EV sales goals. But the transition is proving costly for traditional automakers. Ford recorded a $1.3 billion loss in its EV division in its most recent quarter. General Motors is also losing money on its EVs. They haven't figured out the EV market yet, and if Biden comes back in, the government will keep pushing the EV story, Lee said. The big three could continue to struggle. Now, higher manufacturing costs have driven up EVs price tags, making affordability an issue. Ford CEO Jim Farley told Yahoo Finance earlier this month that the company needs to lower their costs to succeed. We're seeing mainstream customers who are really interested in EVs, but they're not convinced and they're not going to pay a big premium, Farley said. So what it means for the manufacturer is cost. We have to dramatically reduce the cost. Trump target ESG. Investment that take into account environmental, social, and governance factors have become a top target for Republicans ahead of the 2024 election. Trump has been vocal about his opposition to ESG initiatives in the past, promising to support a law to keep policies away from Americans' retirement account forever. During his final month of his term, the push to discourage employers from considering ESG issues for retirement plans, a rule later reversed by Biden. The increased skepticism and scrutiny of sustainable funds from politicians and regulations has had a chilling effect on fund flows. Investors pulled a total of $13 billion from U.S. sustainable funds in 2023, the worst year on record according to Morningstar's data.